Show. We're live again for another episode, and today we had the largest down day on the Nasdaq since 2022. So since the bottom for the Nasdaq in December 2022, we haven't had a 3% down day. It's the first one in almost 17 months, the worst down day. We knew this was coming. Like last stream, I was like, hey, we're at like 505 on the QQQ. The Nasdaq's up like 25% this year. Pullback is healthy. It's natural. If you're gonna hold longs, make sure that you, of course, hedge your longs. There's a lot of downside risk here, and I don't know about the upside risk, the upside potential versus the downside risk. I think there's a lot more downside than upside potential. So that's just my thoughts on it. In terms of like what's been going on in the world, let's chat about that. So I'm working on some really great big real estate deals, and I'm excited about that. I'm going hard in real estate. I continue to acquire units. My goal is still 200 units in 1 year. I might end up stretching that to like 100 units a year, maybe 150 units in a year is probably the most I'll be able to acquire without exploding the back end logistics and operations, because it's a lot to acquire. When you acquire any property, it's a lot of work to onboard it. So I'm going through that right now, and so there'll be, as soon as you solve for one issue, you create a new one, right? New bottlenecks appear wherever you go, whatever you do, you're always going to have a new something to tackle and to challenge. But anyway, it's been a crazy week. I think someone just put a comment in the bottom there. I'll answer it. Hello again from Alberta. Hey, David, how you doing? And the next question from a different David was, thoughts on day trading? Is it a good career choice? I think trading is a terrible career choice. It could be good suited for you. It's hard to say any one thing is better. Oh, my screen's a little bit on an angle there. It's hard to say any one is better than another. So like, as an example, you could make money as a trader if you can develop an edge or an alpha. And sorry, I was having a nap, and I guess I must have been resting on my hand there. That's weird. So you can develop an edge in trading, and you can make money at it. To be good at it and to have an edge requires 80 hours a week. So if you aren't spending the time with a group of other traders looking for a way to have an edge over the millions of other people you're trading against, because it's a competition, right? And you're competing against mostly people who have PhDs in finance, decades of experience, also get up at 5 a.m. to trade every day and put in the time. If you want to put in that kind of work, you can develop an edge. If you just want to work a 9 to 5 trading, or you think it's going to be passive, or you think it's an easy job, or you also, if you like your heart and you don't have a heart attack, probably not a good career to have. Most traders have heart attacks in their 40s and 50s. Like it'll make you go bald, it'll give you a heart attack. It's a terrible career choice in terms of lifestyle. So if you enjoy living your life, not a great career choice. I always thought I thought it'd be a great career, and I tried it, and I'm like, this is horrible. Like the highs and lows, if you have the ability to handle massive amounts of stress and the highs and lows don't bother you, like if you can get wiped out in a day, 50 grand or 100 grand, that doesn't bother you at all. I mean, maybe it's for you. It was not for me. I hate trading. I can't wait to close my account. I have also applied leverage to trading, which was a terrible idea. I know better, and yet I did it anyway. And I did that. Some days I did 10-to-1 leverage. And if the NASDAQ would move down 2%, I could lose 20% of my entire portfolio. Huge amounts of risk with options trading, because you can control massive amounts of shares using options to effectively, if you're good at what you do, it amplifies that. But if you're not good, remember the market makers, they win, not you. So if you don't have a large capital base, it's hard to develop an edge. So my thoughts on that, David, are, depending what your background is, you probably won't have an edge. Something like 99% of traders over a 10-year period lose everything. 99.5% of traders over a 25-year period don't beat the index. So just going and buying and holding the S&P 500 and the NASDAQ, like your diversified ETF, low fee, you hold that, you compare that to people who actively trade, and over a 25-year period, there'll be times where the trader's up 100%, but over the long term, they actually lose to the index, which doubles every 7 years. So I guess suffice to say, David, I would say it's not a great career choice. I wouldn't want to do it. Crazy day today, though, in terms of like just watching the world burn right now, in terms of every sector I'm looking at, there was just so much pain today in the market. And that brought me great joy because we have needed, I liken it to the metaphor of like it being a desert with no rain. And it has just been straight up. Most companies are overvalued by 50 to 100% in tech right now. And they need a correction so bad, like the desert needs rain. And so it is raining, as it should. We need a healthy correction. Even in the strongest of bull markets, you have down days. And we need a few of them because it's just rallied way past what's normal. And that is because if you look at the data, actually, interesting thing I was looking at today, about around percentage of contracts and shares controlled by options. And basically, it's something like 300% more shares are controlled by retail traders using options contracts. And that wasn't a thing 20 years ago. Like the line of like how many shares are controlled by options. Basically, what's the, I guess the point to this? The point is that the market has become like a casino, driven in more mania than ever before. Because in the 80s, it was hard to make a trade. You had to call your broker during certain hours. They'd place a trade. And most capital was controlled by institutions, which meant they had rules and parameters and ways in which they had to execute. They couldn't take massive risk with their clients' fund. They were under SEC regulation. Now you have Joe in his basement, or like Phil or like Sasha with her phone leveraging 100 to 1 with an options contract. Maximum leverage, risking $10,000 to control $200,000 in share price, creating these massive swings of irrationality, furthering the hypothesis that the market is not efficient at all and price is detached from fundamental reality. Now, this happens in business too. This happens in real estate, but not near as much or as pronounced as what we're seeing in the stock market. And so for me, I'm just going to focus on business and real estate. I love to watch it. I love to see when the NASDAQ takes a tank. I like to watch. For me, it's like a video game in a lot of ways. And I've now controlled my portfolio to the point where like if I lost everything in there, in that options account, it doesn't affect me at all. It doesn't affect my financial independence. It's play money. And I feel a lot better, a lot less stressed when it's just play money. But even still, like I think I made 90,000 today on my play money. I made 90 grand. It's a drop in the bucket compared to what I've lost this year alone. I've been shorting Carvana and the NASDAQ and DJT and Sonder and not the NASDAQ, et cetera, so forth. There's a whole bunch of names. Tesla, I'm short Tesla right now a little bit. Things will just get crazy. And when they get crazy, I like to short until they correct. But the key piece is when you're shorting, you have to be able to hold that short for a long time. And it's expensive to hold until you're right. Timing the market is so hard, so hard. None of us are good at timing the market. Fundamentals are great, but they don't tell you when that will happen. A stock could be worth $10 and trade at 100 for a long time. It can trade at 10 times what it's worth just because. Now imagine if you had a house that cost $200,000 to build and it just started trading at $2 million. And everyone's just like, yep, it's worth $2 million until all of a sudden it's worth 500,000. Like real estate just doesn't trade in that same mania, right? It takes a long time to sell. So real estate is a very slow, cash flow focused business. I like it better myself. So yeah. What are your thoughts on LCBO and strike? Gurinder, I don't even follow the strike. I remember seeing an advertisement on my Instagram for, I guess the Ontario government came out with an app to where you can get booze. It's like a beer app of like the places that sell alcohol. I'm like, what? Why are we wasting tax dollars on this? This is the most silly thing I've ever seen. I don't drink. So I completely don't drink, 100% sober. I don't believe that, all of the research on drinking even a little bit of wine or beer, it's toxic to your brain. It leads to dementia and Alzheimer's. It leads to a lesser productivity. Why would you not want to be your best self? Why would you want to be a lesser, slower version? It's like getting a virus and slowing your RAM down on your computer. I get why people do it. It's a social lubricant, whatever, but like, just not for me. My grandfather was a raging drunk, and so I have reasons why I will never drink. I just don't want to be anything like him, and I'm worried that the genetic propensity is there. So for me, I don't follow at all. It doesn't affect me at all because I don't drink. I'm 100% sober. I get high on life. My weaknesses are like, Haagen-Dazs ice cream here or there. Those are like my vices. And even that, like I know sugar, glucose spikes, actually a little health lesson. We know the leading cause of cancer, leading cause of Alzheimer's and dementia. Actually, they're thinking about renaming Alzheimer's to diabetes number 3 or number 4, because it's literally the brain unable to handle the glucose spikes anymore and unable to store information. The information's still there, but they can't access it because of the inability to handle glucose spikes. So it's literally sugar that causes Alzheimer's and leads to dementia as well. So if you want to have a shitty later time in life, eat a ton of sugar, drink a lot of booze, booze every weekend, have a beer in your hands, a little bit's less bad. It's like having a single cigarette, less bad. I also don't smoke, but again, a little bit less bad in terms of like your health. There are tons of things you can do to negate that if you have those vices. I mean, lots of exercise is an amazing thing you can do to counteract a lot of those negatives. But yeah, anyway, I have no effect. It has no effect on me. Sorry, this strike in any way. So yeah. You know what? I'm gonna do something else here. Just a shameless plug. I'm working on a project right now where there is potentially a 200 unit development. It's currently a hotel and has a restaurant and a bar, a number of other things. It's a great opportunity. I'm looking to take out the private first mortgages on it and take the building on. And to buy this building, I need a first mortgage, what's called a bridge loan or a stabilization until I can get the project showing basically 1 full year of financial statements to take to a credit union or a bank. So if anyone knows of anyone or wants to contribute, I need to raise $4 million at around 10%. So I'm going to throw that out there to my audience here. It's a first secured 45% loan to value, meaning I put 55 cents down and I only need to borrow, the leverage is less than 1-to-1 on a building that can generate $1 million in revenue as it is, with the potential to generate $15 million a year when it's completed. So while it's being developed, the current building sustains all development costs. So it's a development with no carry. Definitely an interesting project. So something I might bring into social media to try to raise. It would be ideal if I had a follower who was like, yeah, I have $3.5 million, $4 million. I'd be happy to just take this on and make 10%, super safe, get an appraisal, show the value. So hit me up if you're that person watching this, because I know a few of you guys who follow me do have that kind of capital. One of you I'm going to probably call. I'm thinking about them to see if they want to, or if they have the capital available to fund this, because I know there was a time when I could have funded this like nothing, but I'm all out deployed in different various projects. At some point, I may end up owning that building in cash and then having to go to CMHC for the takeout. It's great because the Canadian government wants housing so bad. So if I build a bunch of units, they'll fund me 95% loan to value to build this project, where I could end up owning like a $75 million finished project with like potentially nothing down and $5 million of created equity trapped in the deal. It's just unreal how good the financing terms are in Canada and how bad the federal government right now in Ontario and the provincial government as well, but the federal government wants housing, that they're literally going to like incentivize, if you go through the hoops and jump through all this stuff, they'll incentivize you to build. And so I'm taking advantage of that. The government's going to pay me and they're going to lend at like, once stabilized, they'll even lend to build. CMHC will do lend to build projects at like 3.99%. I'm hearing like 2 years ago, they were lending at 1% interest for 50-year amortization. 50-year amortization, 95% loan to value, backed by the government at 1% interest. Who doesn't want to take on buildings at 1% cost of debt when inflation is really running at like 5%? I mean, it's literally free money. So I'm gonna put my hand out, take on some projects. I do have this goal of like eventually getting to like 200 million, 250 million in real estate holdings. And whether I get there or not, I don't know. The goals change, right? Like some days I wake up and I'm like, I just want to have a huge real estate portfolio. Other days I wake up and I'm like, I just want to relax today. So it depends on the flavor that I'm feeling, but right now I'm in growth mode, and the time for relaxing is when we're going the next bull run. When everyone's hyped about real estate, that's when I want to go hard. Right now is the time. No one is hyped about real estate. Everyone's afraid. Everyone's hanging on to their capital. All these projects are going under. That's when you want to really, really stick your neck out and start to acquire some stuff. So that's what I'm doing. David says, how do we contribute to your fund? I don't have a fund. I'm not licensed to raise. I'd have to go get, I'm sure, some compliance stuff to build a fund. What I could do is a private mortgage on the property. So a few people could come together and they could lend against the property, totally legal. I can borrow in first secure position to get from private investors, no problem. So that's how I would probably structure it. It's at some point, I would love to take a project like this, move it into a fund and share with you guys equity in that project. That would be ideal. I just don't know the steps I have to go through. I'm sure there's some compliance and regulatory stuff I have to go through. Again, I don't know. I don't know what I don't know. So that's something I have to dive deeper on to let you guys know. I don't know. So Randy says, looking into multifamily, 46 units, anything pre-2018 is rent controlled. So you mean post-2018. That's true. In Ontario, if you build new, another pro for building new in Ontario, if you build new construction, 2018 or newer, anything you build now, there's no rent control. So you can say to the tenant, your lease is up, your rent was $2,000, now it's $2,500, pay it or leave. You'd have a really bad tenant there by accident, you place someone terrible. You say, okay, your rent's $5,000 a month, pay it or leave. And that's justified. There is no rent control, as it should be. So there is a lot of incentive right now for newer built real estate, which trades at an insane premium here in Ontario for that reason. Because landlords, well, not all landlords know, but many landlords know that there is a big difference between a new built property in Ontario and an older built property, because the older built properties are all rent controlled here in this market. And there's ways around that too. And I've built a career around buying 50 and 100-year-old buildings and turning them around, stabilizing them, bringing the rents up, bringing the expenses down, and renovating them, improving them. But there is a place for the new build stuff too. And as I mature and develop in my experience levels, I'm noticing that there are opportunities for that kind of stuff too, where like builders are quoting $250 and you can build for $175 a square foot. So there's a huge margin there. If you basically subcontract it yourself as the general contractor, you bring in subcontractors to do the work. So there's some interesting stuff there potentially. Christian says, nice to finally catch another stream live. Thank you for your time. Hey, no problem. Where can I find borrowers looking for a 60% LTV? So there are lots of people out there who were looking to lend. Less now, obviously, than what there was in the bull market when everyone just had like free money. But you got to remember that the wealthy in this country are wealthier than they've ever been. Specifically, if you invested in the S&P 500 or the NASDAQ, which are close to all-time highs, right? We're a few percentage points off of all-time highs. There was a lot of wealth created for people who bought NVIDIA, Facebook, so it's called Meta now, Meta, Microsoft, Google, Amazon, all the Magnificent Seven. Honestly, a lot of the tech stuff right now is doubled and tripled in value, quadrupled in value in some cases. So people who had a few $1 million in their investment account, it's become from $3 million portfolio to a $6 million portfolio. So it's like $3 million free money, just printed out of nowhere in a year and a half. So although real estate has been hurt, other sectors and areas not as affected. New to your channel, what are we discussing? Right now we were discussing stock market. Now we're discussing real estate, and we're talking about opportunities in Ontario here in the new build sector. I was talking about some projects that I'm working on here. We're getting close to, with this new acquisition, when it goes through, we'll be looking at well over 100 units now in the portfolio and growing towards 200. So starting back up into real estate again. At one point I had almost no units because I had disposed my portfolio into late 2021, early 2022. I just noticed everything was overvalued, and so I cashed out my entire portfolio and was like, this is crazy. And now I'm noticing everything is a great value. There are some really good deals. Rents have gone up 25% in like a 3-year period, and prices have gone down 25%. So the spread between rent and price has just gotten to a great ratio where I just want to acquire again. And as rates fall in the environment we're going into, I think there's a lot of opportunity. So there is no fund. To answer your question, how do you contribute? There is no fund. Just reach out to me at rosehartcapital@gmail.com. If you have a sizable amount of capital and you want to put it to work, I have projects right now and opportunities where I can definitely put that to work and get passive income going for people. I have now across my desk more projects going into receivership that people are passing me than I have capital to deploy. And stuff at like 20, 30% off just flying across my desk right now. So it's the land of opportunity has begun again, which is great. So a lot of big projects, a lot of stuff we could take on. If I had unlimited capital, I could double it over the next 5 years. But I don't have unlimited capital, unfortunately. And it's about managing risk too, right, at the same time. So yeah, you want to obviously manage your risk. You want to make sure you don't take on too much that you can't handle the logistics behind it and the operations behind it. So it's about growing, within what you can afford to carry from a mind space perspective as well as a financial perspective. Like if you give me 1,000 units right now, I'd be struggling to source enough staff to handle all of the problems that come with a portfolio like that. So growing carefully, but there is economies of scale. Like as an example, I'm looking now to hire anyone watching this replay or watching this now. If you know someone who is interested in doing property management, I need help leasing like 30 places right now. So if someone likes to rent places out, wants to do property management, we're looking for someone full-time for that role in Sarnia, London area. More Sarnia right now. If you like hotel stuff, we're getting into that space as well with several hotels and you're interested in that space, there's room to grow. If you like renovating, we have tons of construction projects. Please apply, rosehartcapital@gmail.com. Send me your resume, send me a message. I have too much to do and not enough people to do it at reasonable prices. So if you pay enough, you can get someone to do any role. But the goal in being an entrepreneur is finding those gems who add more value than they cost. And it isn't really about what someone costs, it's about the value they bring to the table. And so, yeah, that's what's up right now in my world. What else is going on? Give you guys the update. I'm trying to think. I think rates are going to fall a little further. We're having some stumbling blocks along the way, but rates are meaningfully coming down in Canada, which is the time you want to buy is when rates start falling. So we're getting into that time into next year where we're going to have some really terrible comps that come to pass because the data suggests that as rates start to fall, they fall right when everyone's going bankrupt. So all the people who were suffering last year as rates were going higher, they're already done. They're into foreclosure now. They're into the courts. 6 months to a year from now, those people are, and starting now, those projects are starting to hit the market. And so we have an influx in inventory right now and not a lot of buyers. So for those who are the buyers, can raise capital, the world's your oyster in terms of projects you can take on. So anyway, that's what I had to share for this week. Yeah, that's all the updates I got. I'll go to the Q&A real quick and see if I missed anyone here. I don't know anything about Addy Invest Canada. I haven't looked into that. Someone continues to share that with me, I think, on this stream every week. So maybe I should look into this Addy Invest. I don't know what the compliance would be with that, but could be an interesting project, actually. Maybe I could just throw the project on there and get financing that way. How are your kiddos? My kids are great. I have 3 kids. They're awesome. Yeah, they're a lively bunch, always, fighting, running around, dancing. Yeah, there's always something going on in the Rosehart household. We have a very busy house. There's always someone over too. Like if my grandfather lives with us as an example, my mom was living with us for a bit. We have one of my good friends lives with us as well. It's just the way it is. I have a very, very busy household. So I love it. I love the energy. Yeah, but wouldn't have it any other way. I live in, overall, I have obviously a lot of downsides and a lot of, issues that pop up with my busy life, but I wouldn't trade it for the world. And I'm thankful every day for my family and for all of you guys and for everyone in my life that makes my life as great as it is. And I honestly have a blessed life. I shouldn't complain at all. I maybe should get more sleep. I maybe should exercise a little more. I maybe should reduce my stress a little bit, but I'm overall blessed. And yeah, life's good. Thank you for asking. Last question, Hamik, what are your thoughts on new builds in West 5 next to McDonald's as an appreciation play? Well, I live exactly where you're talking. I can see that out my window. So I'm obviously biased and bullish on the area, again, because I own acreage in this area in London, in West 5 you're talking about. I don't love right on that corner. Like I would like housing that's a little further back unless it's big time multifamily. But yeah, I think West 5 is way underrated. I think it's the best subdivision in London by far. I researched everywhere before I decided where I was going to buy. The St. Nicholas is the best school in London that's a Catholic public school in terms of like government funded. It's a great school. It rivals the private schools in my opinion. The teachers are fantastic. The school program is amazing. The socioeconomic status in this area, there's been no crimes on my street reported ever. No thieving, no domestic violence, just people are rich and you don't hear about those problems. Poor people have those kind of problems. Rich people tend not to have those problems. If they do, they take care of them quietly. But I haven't seen any evidence to support this area being anything but amazing. I am extremely bullish. Am I buying stuff that doesn't cash flow? No. Like I'm not out here acquiring new builds next to McDonald's because I think that the price is just unreal that they're asking. And it's justified because the area is so good, but just how does it cash flow, If I could buy like a multifamily in this space, I don't know if I guess the province is supporting 4 units per single family. I should buy a lot and try to build something in this area. If anyone knows of any land opportunities, I missed one. There was 10 acres right behind me that I should have bought. I didn't. At the time, I just didn't want to take on a big development project like that. But in hindsight, maybe I should have. And then, yeah, so to answer your question, what are my thoughts? I like it. I would rather, like, if you're going to live in the house and you're trying to choose an area, I think it's a great area to be in with your family. They put on, like last week, they put on in the park there, Sifton, the developer, put on a big movie night in the park. They brought a projector, they brought free snacks. All the kids sat out and we watched Wonka play on a loudspeaker over a nice projection on the TV. They had a science day where they brought like cool stuff for the kids to play with. They do like weekly events. So the park there, they're gonna start doing concerts and stuff. You have that walkability of like upscale shops and boutiques all within walking distance. That's why I love that I can walk out my front door and I'm at all the best boutiques here in West London. It's better than Byron. It's better than North London. It rivals, I would say, anything they have going on in Richmond Row in the north there. It's better in my opinion. Yeah, I mean, I'm a little bit biased, but in my opinion, one of the best areas to live. The only other area I'd rather live is if I didn't want to live in London, I would go live on the lake, on Lake Huron, the cleanest, best lake. So out near like Grand Bend or something would be my ideal place to have an estate. But I'm more of a country bum. My favorite place is like in front of a campfire, surrounded by no neighbors. That's just how I like to live. I'm lucky that the place that I have here in West 5, I have no neighbors, but that's because I have a large lot and I back onto hundreds of acres of green space and stuff. So I'm lucky, but I'm also a country boy. So maybe my perspective doesn't align with yours. Again, it comes up to your own desires, you know? If you're looking for something like that and you want to buy something that's a new build, I mean, it can make sense. There can be an appreciation play too in terms of like buying new builds in early phases. We're getting the later phases in that area, but I don't know. I like to buy cash flow. For me, I'd like to buy something that can sustain itself. And the single family stuff just doesn't sustain itself. You need to have the multifamily. So if you could buy like a fourplex at a reasonable cost, a couple $100,000 a unit, then you could cash flow, you could hold it, you can win in the long term. So it's all about cash flow. When you buy real estate, you want to have that cash flow. So even a development play, I like to buy development plays that have existing buildings that can cash flow while I'm developing. So there's never a burn for me because it produces enough cash flow to cover the carry. Developers go bankrupt because they can't afford the burn rate. So the mortgage, the property taxes, all the costs ongoing to keep the property for the time that it takes to develop the property. So that's the biggest risk in development is the burn rate. And so if your burn rate is 0 or your cash flow positive even on a development, that's the best. They use crowdfunding exemption. So you have to send me an email about this at rosehartcapital@gmail.com. Explain to me exactly how this fund works. I would love to hear more about that. So yeah, shoot me a message and help me understand that because maybe there is something there where I could, look into that. I don't know what the fee structure looks like. I probably have to give a percent of the deal to these people to raise for the fund. So I don't know. I have to look into to all the options to fully understand it because I don't understand how those funds raise capital for my property without me giving up control in some way. So maybe there is a way to raise a certain portion of the deal, and in which case I should be looking into it. I don't know. But yeah, thank you so much everyone for watching. I appreciate everyone for tuning in. If you're watching the replay, hit the thumbs up button, leave me a comment, let me know what's going on in your life. And if there's anything that I can do to help, obviously reach out to me. You know where to find me on social media, blue checkmark at Mike Rosehart. I post stories daily. There's lots of free, great content. So feel free to follow along and we'll see you next week live on YouTube every Wednesday, 7 to 8 p.m. Eastern Standard Time. And remember, the secret to unlocking wealth through you is 3 levers to control your financial future. Spend less, earn more, and maximize returns in the difference. That's the equation to building wealth. That's the secret formula to freedom. Good night, everyone. See you next week.